All right, let's talk about something that always fires Brent up. Annuities.
Why are we talking about annuities?
Why?
Yeah.
You don't want to talk about annuities?
I mean, what do we want to know about annuities?
Well, so
Buffer annuities?
here's what I think we should be talking about annuities is a lot of people, clients, prospective clients, right? It's annuity selling season. Rates are still pretty attractive, so they could lock in a good rate on an annuity. We're at the election, so we're at peak fear right now, right? Red, blue, doesn't matter. Both sides are scared, right? They're scared if Trump gets in, they're scared if Harris gets in. So there's fear. So now, two selling points, good rates and fear. And then there's also, Fed's cutting rates, recession's coming, stock market's going to crash. It's prime annuity selling season. Are these a good idea? Should people be purchasing annuities?
You should never purchase an annuity from somebody that does these pitches at a dinner seminar, because all they're trying to do is sell you an annuity that's going to pay them a commission that they're going to make a lot of money on and that you're not going to make very good interest rate on. You know what I didn't hear a lot about at Future Proof, where you have all your top tech companies, you have all your advanced companies, you have all the top leaders in the industry, you have top advisors all over the country there. Annuities. Annuities was not a discussion there.
That's a really good point. There was not much talk at all about annuities.
The annuity scheme has kind of unfolded itself over the last 2 decades, and I get the purpose of annuities. When you need an investment structure that's going to be tax deferred and you have unrealized gains in another annuity, you can get an annuity that has no compensation to the advisor and is not going to lock you in a long contract. That is the only time that you should be using an annuity, is for taxable purposes. Now, granted, some of the structure of annuities are people like, right? They get pitched the upside of the market without any downside risk. But a lot of that's also gimmick. Remember, you're getting locked into a contract where they're controlling your returns. Controlling your returns meaning they're controlling the rates, the caps that how much you can make. And if they say that in the beginning of the contract you can make X, well, guess what? If you're locked into a long-term contract, those rates are going to come down. And yes, it is annuity season right now because the rates were great and you're locked in. You got into a contract, let's say 3 years ago, and guess what happens when the feds are lowering rates? Your contract rates are going to start creeping down.
Yeah, so who should be using annuities? For me personally, I like to use them with clients who are extremely just fearful of taking any risk at all, right? They don't even want to deal with the little volatility you get from bonds. They want a little bit better rate of return on cash, and they're okay with locking their money, and that's when I would use it. But
Yeah,
what about you guys?
But it's the potential that they could potentially make a little bit more, because the market has to respond in a way that it has to be going up. And then you're assuming that their cap rate is higher than the rate of bonds or the rate of what they could be making somewhere else. And if you average that over 2 to 3 years, you have to assume that the market's up for 2 to 3 years to think that you're above that average. So if you line itemed out what an annuity did in terms of performance versus a yield on a bond for 3 years, are you actually that much higher?
I think just the key here is the no downside, right? There's the no downside protection risk, and that's how they get it.
That's how they
So
get sold.
What you're kind of saying then, you don't have any appetite for risk and you can't afford to take a risk.
Exactly.
Then you're like, hey, I might be considering an annuity. I think one option with an annuity isn't actually even a fixed annuity. It's a variable annuity. And if you're lump summing a pension out of, that could be a really good place for an annuity.
Yes.
Because you can add they have some riders on there for death benefits. So not getting into recommendations, but you're asking me, with our clients, when is there a situation where we could explore an annuity option? It's that situation.
There are so many situations where they do and can make sense. But again, you're having to talk about a very small margin of the type of annuities that will fit that structure, where most people get sold these annuities that aren't going to actually solve their problem. It's just going to make it worse.
So, and what we're talking about of placing them for a specific need is not the way they're sold.
Correct.
Yeah, so you're saying it could work. There's a place for it in a financial plan for a specific set of people, but we also don't want to throw our whole portfolio at this, right?
And I heard dinner seminars are coming back right now.
Who told you that?
I heard that too.
I heard many clients
I
are
heard
getting
that
these
too.
mailers in the mail right now,
Really?
I heard-
and they're coming through.
Orange County Mining Company's popping off.
Where's Orange County Mining Company?
Brent, do you know where it's at?
Yeah, it's in Orange. Yeah,
It's like
there's one
Pomona Valley. You're more familiar with.
Oh
Pomona
yeah, I know
Valley Mining
Pomona
Company.
Valley Mining. Yeah,
But I heard that they're packed.
Yeah, the places are starting to fill up. People are getting them again, like every other week or every week
really.
for different seminars.
And
Yep, people
Fleming's
are-
too.
Yes, nice
See,
restaurants.
you want to know why we're talking about annuities? We're talking about annuities because it's hot.
Yeah.
It's hot again.
I want the listeners to also remember to put on a 2-night seminar is probably going to cost the advisor and today's rates.
Yeah, you gotta go to today's rates because we're all
Yeah.
paying these prices.
It's at least
Adjusted for
It's at
inflation?
least probably $12,000 to put on two
a
nights.
night.
That's
To-
a lot
for,
of
for the
money.
2 nights. They're generally on Tuesdays and Thursdays. They feed you a free meal, and they're trying to get you to come in and meet with them. And they're going to sell you an annuity because the only way they can make back the 12,000, and I'd probably say that range is 12 to 15.
Yeah, I was gonna say. So they need to make 15 to 20,000 in commission sales that night to make it.
They need to make
worthwhile.
well more than that.
Right. And the average commission, I think, on an annuity right now is anywhere from 6 to 8%, depending on the quality of the annuity. Higher quality, less commission. Best quality, no commission. They have to sell somewhere in that $200,000 annuity range every seminar, so that they have to at least get one client from that seminar that they're going to sell a $200,000 annuity to just to break even.
Wow, annuity people are living better than real estate agents.
They weren't during COVID.
Any final thoughts on annuities?
Work with a fee-only advisor who really cares about your planning and more about the structure of helping you accomplish your goals, not just throwing a product in your face that's going to make them a lot of money. I've seen how annuities work for over a decade. I work so closely with them. They're not good structured investments for people.